Hello, everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacchino. By the way, if you're new here, please do consider subscribing, ringing that bell, and hitting the like button. Ring the bell so you know, especially when we go live with our live streams, and that like button does help the channel keep growing. So we're going to do our sector review using the Spider ETFs and a couple other ones to just get an gauge on what we should be focusing on the next week. I also have some buy patterns on here, whether they be aggressive or conservative, not just to issue buy alerts, but to help you understand when the last major buy pattern kicked off in some of these sectors, so you can gauge, whether you're going to wait for a pullback or whether you're going to just jump on the continued rally. So let's switch cameras here. There we go. Taking a look at XLE, the Energy Select Spider, in buy mode since the 24th on a daily basis. You can see still above the rotation zone, above major key support. Here's your weekly, also weekly buy from the 3rd of January, trending up. Anything still pullbacks, again, above 58.62 are, from our opinion, to be bought. Again, this is for educational purposes only. Next target, 68.08, 70.63. And you can still see there's not a lot of clear path moves up here. 68.08 is a great area to raise stops, whether you're trading an individual stock or the sector. And then 70.63 could be partial profits and or raise stops. Again, key line in the sand is about 57.42. Doing a comparison to outperforming with the S&P, you're going to want to go to major swing highs or lows, because that's how it works best. Don't just start your chart from anywhere, because it makes literally no sense. So you can see here, back from a major weekly swing low from the 16th of March of 20. Energy up 103%, S&P up 63%. From a more recent one, and this is on a weekly basis, from this key low on the about the end of October of 20, S&P up 27%, energy up 117. If you want to go more recent with just a daily move, here's a great little daily move to anchor on, about the 20th of December. Energy up 18%, SPX up 4%. So how would you play this? Well, this could be an area you could either just play the XLE or another ETF, or you could go into the energy sector and go and find stocks that have buy patterns and are outperforming. So I would go, and even if they're outperforming the XLE, those would be the ones I would get in, unless you have a really strong buy pattern on something that has not yet started running. But I always find it is still better to find things that are outperforming and get in on pullbacks rather than something that's really lagging. So that is your XLE real estate. Now, this is an example of something lagging. We'll get to the outperforms, underperforms. It just had our key buy pattern. Aggressive, it's against the daily rotation zone. I'm still going to watch how this runs up if it does get to about this 47.85, which is the top of the declining rotation zone, and a minor significant level up there. I'm going to act to see how it reacts, but this would be very aggressive since it is in a declining rotation zone. You can see there on the daily. Weekly is only in neutral mode. In order for weekly to get back to bullish mode, we need a weekly close back above about 48 area. That would take it back to bullish mode. So especially in something like this, you're looking for a real estate stock, if you're going to play real estate, that's definitely outperforming and it is still aggressive, because the whole sector is underwater, and this is just in a very aggressive bounce play. If you compare it to the SPX again, you can see since this high, roughly there, S&P down 7.5%, real estate down 9.44%. So definitely underperforming. If you want to go back to a key swing low recently, you see it's slightly overperforming from the recent swing low, but underperforming on the pullback. So This is not something I'm aggressively in unless there's a specific stock that's really outperforming in the real estate sector that we can watch for. Now, it did outperform on the last little run up. We're looking like we're still getting a bounce in the broad markets. So this is something that might be an aggressive play on a swing side, but not necessarily an aggressive long-term play yet. Let me get over to XLF, the financial ETF. No recent buy signals. We had a buy signal back on the daily, 21st of December, then the 3rd of January. Then we had the pullback back below the rotation zone, finding a key resistance point, sort of bouncing up again now. This is not, by the way, a potential double bottom. I will get more interested if we get a daily close above about 39.35. Then we're into a nice little clear path move, actually an advanced clear path move. And the first target would be around 40.75. The next major target would be around 41.51. It's still in bearish mode on the short term. No major buy signal on the longer term, and it tried to break down, got back down to a 50-week exponential, bouncing above this key trend line. This trend line is what I'm watching for a closing basis. If it rolls back over on a weekly, if it gets a close below there, that's it will shift to much more bearish mode for us. It's a neutral mode on a weekly. So in the sector in terms of financials is very mixed performance. So this is definitely what you want to scan for and find something outperforming. Do not do something, from my perspective, that's underperforming the XLF in those individual stocks. How it compares to the S&P? Again, let's get to the swing low here right after we got a buy signal, or right before we got a buy signal. You can see S&P down 4.09, XLS is at 0.34% up, 34 basis points. So roughly neutral in the but outperforming the S&P. If you look on since the sell-off, you're roughly down more than the S&P. Okay, so based off the most recent sell-off, this is weakness. So if the S&P starts showing again more weakness, XLF, I'm not going to be in the ETF, and stocks on an individual basis are the ones that are outperforming, not just the broad market. This is something I don't want to be in, financial stocks, if the S&P rolls over and the XLF rolls over, unless they are significantly outperforming on that basis. There is no little recent buy signal on either the daily or the weekly basis, which is also keeping me a little hesitant. Technology just got the buy signal, again, aggressive against the daily rotation zone, actually into an advanced clear path move. First target is the other side of the rotation zone. Let me take off the S&P so we can see the numbers. We're looking, first target is about 161 area. Then I'm watching 163.25, and this is for the XLK ETF. If we get above there, 163.25 is a major target, by the way. Above there, then the next key area is right around 169.25. Again, just got the buy signal on a daily basis. There's the weekly basis. There is no buy signal, but next week, if you got to close above this high, that would be a conservative buy signal. And if we get a more aggressive one, I will list it out next week. But you can also see it's got some room to run. It is still in neutral mode on the weekly and in bearish mode still on the daily. So if this case, I would definitely look for stocks outperforming in the technology sector and watch for a continued run up on these. Not yet overbought. Under or over performance, we're still going to look against the SPX just for the point of comparison. I'd also look against the NASDAQ since the major topping area at the end of December. Technology down 8.64, S&P down 6.22. So if this rolls over, and I'm not long-term bullish on technology, I'm short-term still watching for a bounce, but then long-term watching for another rollover play. You can see since the low back in 5th of October, the S&P up 2.8, XLK up 5.81. So over that longer period, it was slightly outperforming, but underperforming recently. That's why, again, these are more of swing trade plays for me, not longer term plays as of yet. XLI, the industrial sector, is Also, we're oversold on the daily basis, coming down, trying to put in a little bottoming pattern. This looks like it could be a potential double at some point. We'll look at that if it does trigger. Key resistance is going to be off of this high, this little high from this bar, 102.50 area. If we got to close above that, that could be a little bullish sign for us. I can just put this on right now. And we'd be watching for about 104.71, 105.82, 106.93, but that would have to trigger on a closing basis above 102.50. No other buy signal that's triggered. This is against the daily rotation zone. What would be interesting if the daily rotation zone gets out of the way, which is this top, the blue line, and then it triggers this, that would be a much more bullish scenario. The last couple buy signals, we had one on the 4th of January that then triggered this little double topping pattern that sold off, and before that was the 21st of December. On the weekly basis, there is nothing. The last one was the 27th of December, but you see here, we closed below this key trend line on the daily basis, and then retesting key support but holding above it. If you get a weekly close below 98.54, that's a pretty significant weekly sell signal. It's now technically in bearish mode on the weekly, and then we'd be watching for a drop to about 89.70. So industrials are nothing from our perspective to be super bullish on. Out or underperformance based off the last high. You can see S&P down 7.5%, XLI only down 5%. So it's slightly outperformed since the last recent highs, but not to a level that this is the primary thing I'm looking at. You go a little farther back to the prior topping area, you know, it's down slightly more in the S&P. So this is roughly in line. And since these key lows down here, you know, it's just a slight underperformance. So I'd need to have a very strong stock in the industrial sector on an outperforming basis to keep that in. Now, if we start getting a close, we start triggering this double bottom, and then especially get a close above about 107.50 on a weekly basis, then my tune will change on that. But until that happens, not much to talk about. XLY. Consumer discretionary, which has been hit, you know, with consumer spending pulling back. We do have a potential double bottom. We had an aggressive buy back on the 24th. We still have another aggressive buy on the 28th. Those are against the daily rotation zone. So why I'm watching these is they can come up anywhere in here and just roll over. So this would be just a short-term bounce play unless you have a really strong stock in this consumer discretionary sector that's really outperforming. This would not be something I'd be turning to. I'd actually look to sell this again on a rollover somewhere in the daily rotation zone. Why I'm showing you aggressive buys, because these are aggressive and can roll over anytime in this rotation zone. We have a potential double bottom, but it would have to get a close above 184.93. I just watched for 185. And you have the 200 right in the way. This is a lower probability double bottom. So this would just be moving up stops, super aggressive. In bearish mode, also on the weekly. This is something I'm actually just watching for a bounce and then a rollover. And this could be for shorting underperforming and very weak consumer discretionary. I would not look to be shorting outperforming stocks in this sector. You can see it just shifted into bearish mode. So all these plays are on a bounce plays, and it did have a weekly double top, which got down to the first and second target. So again, this could easily roll up and then come back down and still hit lower prices longer term. We are very bearish on this. Not looking to do anything in this sector unless something has a really strong buy pattern and is outperforming. You can see here since the tops on the daily basis, the most recent, the S&P down 7.5%, and this sector, consumer discretionary, 13. So if we even get a bounce in S&P, then roll over again, you don't want to be in this from our perspective. This is stuff you want to steer clear of. If you're looking to get out of stuff, look on this coming up bounce to lighten up positions. Again, all this is for educational purposes, only just trying to help people understand where the different sectors are, and this is not something that we would be aggressively pursuing at this point. XLV, healthcare, little daily buy signal on the 28th, another one on the 25th. Again, both aggressive. They are against the daily rotation zone, so just watching for a continued bounce in this. But these are, again, bounce plays only unless you have something really outperforming in the healthcare sector. Next targets on this, it's actually into this little clear path move, but next target's about 132.50, then 133.76. On the weekly basis, no buy signal on this levels, so there's no longer term weekly buys. The last were from October 11th and December 6th, and those obviously then topping out with this rollover. You're still technically in neutral, but could be shifting to bearish mode, especially on the next rollover. Let's do our comparison with the S&P. So since this recent high, again, I'm shifting the chart over because that's where it starts gauging the comparison. So since about December 30th, you can see S&P down 7.5 and XLV, the healthcare sector, down 7.5. I mean 7.6 to 7.54, 7.59, roughly same performance. So yeah, you might get this get and bounce. We're long some of the S&P right now, still watching for a continued bounce play for the next 3 or 4 days. But when that rolls over, don't want to be in healthcare at this point unless it's a very strong stock that continues to outperform. That's the way you doesn't mean you just abandon healthcare, but you need to be in something very strong. And if the stock's just in line with the way the performance has been or underperforming, it's not something you want to be in. And I'd look to unwind that position on a bounce. XLB materials, little potential double bottom on a daily. It would need a close above 84.70 to trigger. It is against the rotation zone. Here's the targets: 86.44, 87.31, 88.17. Okay, that's your daily. There's no other buy signal on this right now. You're from a weekly perspective trying to hold the weekly 50 EMA. The last weekly buy was on December 6th, and you see then we had the divergence top and then rolling over. Still in neutral mode, but looking to shift on into bullish. I am not aggressive on this sector, and even if it triggers this double, unless you have a very strong stock outperforming, not something to really hang your hat on in this one, and would really watch for potential rollover between the daily rotation zone and 86.44 unless you get a strong close above 86.44, and then we'd be watching for the upper end of those targets. On an out or underperformance basis, you can see here since this high back at the 5th of January, S&P down 7.6, the material select down 6.94, so roughly 7% to 7.5%, just slightly beating the S&P. But why would I want to be in this unless, again, super strong stock outperforming the in the material sector? Fine. Other than that, don't want to touch it. Just don't want to touch it unless we get that little bounce play. And then again, looking for a very strong outperforming stock. XLP coming down. We had this double top trigger. Let's see. Let me see here. No, sorry, that was a head and shoulders pattern. Coming back down, essentially hitting all 3 targets. So that one is off. That was a head and shoulders, still below the neckline. That is a very key area right now. We do have this little mini double bottom on the daily, and it is valid because at least the first and second targets are in here. So if we get a close above 75.98, then I am watching for key is 77, and then 77.50 area, then 78.11. Again, aggressive, getting out of oversold condition, completing that that bottoming or the topping pattern, coming back down to the to the rotation zone on the weekly basis, and closing back up. This is sort of interesting from consumer staples. Nice little correction. I am actually bullish on this sector. We're bullish on the weekly. We are now Still technically flattening out, slightly bearish, but you triggered this bottoming pattern. We're actually blown bullish in this. This would be one that could be played with the ETF, or especially look for things outperforming in the sector. Last major weekly buy pattern was on the 6th of December, and we just came back to that rotation zone. By the way, a close next week above this week's high will be a conservative buy entry, and we already have that potential double bottom play. So this is something, again, stocks outperforming or even at performance for the consumer staples we are very interested in. Since this low back at beginning of December, you can see it's not even on the chart here. Sorry. Let me see here. You can see S&P, even for just before, down close to negative 3.5. The consumer staples at 5%, so that's roughly an 8.5% difference. This is a great one, especially if the S&P rolls over. Consumer staples, with the inflation, with consumer discretionary spending slowing down, great sector to be in from our aspect. And since the last little major top, you can see this is only off 2.5%, and I don't even know where this is, but it's down pretty big on, at least at this perspective. So here we go, down 7.5%. So nothing I want to touch, or this is what I want to be in should we continue in weakness in the S&P. And again, could get a little short-term buy signal with this very reliable double bottom pattern. Communications, very aggressive buy signal on Friday. Still against the rotation zone and hasn't triggered his double bottom pattern yet. So you could get double buy patterns if we get a daily close above this 72.35 against the daily rotation zone. So these are aggressive. If you have an outperforming communication stock, then that could be something, especially if this triggers a double buy pattern, to watch for a continued rally. If you're stuff in underperforming, this would be a sector on any move up I'd be looking to get out of. First targets areas are about 74.38 to about 74.50. You do have a gap left behind on this ETF, and then we'd be watching 75.22. Weekly basis, you can see the last aggressive buy was on December 6th, just back in the weekly rotation zone, which is in bearish mode, and then rolling over again. Bearish mode still. So even if we hit this pattern and get up to all three of the double targets, we'd be watching for a rollover play. Not something to be super aggressive on longer term. This is a very short bounce play and not a sector we're interested in longer term. What happened to my comparison? There we go. You can see the S&P since these highs on a weekly basis in September or end of August. S&P down 1.72%. Communications down 14.5%. Not good. Since the most recent top at the end of December, S&P down 6.2, communications down 7.43. This is not, again, I'd be looking to get my out of positions on stocks I don't want to be in the communication sectors on this bounce. This is not something I want to be in, especially if the S&P rolls over again. XLU, we just got a daily buy signal again against the rotation zone. This has been in correction mode too, so get very aggressive into a little clear path move, but first target would be around 68.70. On the weekly basis, no buy signal. Back below into neutral mode, very choppy into an uptrend, very also interest rate dependent on here. So nothing that I'm getting aggressive in. This would just be on a little bounce play in the utilities if we want to compare that to the S&P. Since this top being put in at the end of December, S&P down roughly 7.2%, XLU down 4.7%. So outperforming, but still way underperforming on a pullback basis. Nothing that we're interested in at this point. DBC, looking at this, even though it's not a sector, it's commodities. Commodities are very bullish on long term. Here's your buy pattern back at December 20th, another buy pattern on the 3rd of January. Aggressive rotation zone buy pattern right here. Let me put that one on also. Oops. I'll just, okay. I'll go fix that one later. Maybe I'll fix it now. Okay, it's not letting me. Sorry about that. Again, still no divergence on here. In significant bullish mode. Commodities, I'm bullish mode on any pullback. We had a weekly buy pattern on December 6th, still holding up, hitting the next harmonic target, 22.35. Next key level is 22.84. This is to be bought from our perspective on key pullbacks. So, and anything outperforming in the commodity sector is an excellent play right now. If you want the relative strength versus the S&P, coming from these lows back at the beginning of December, you can see the S&P down close to 5%, commodities up 11.5%. Definitely something to be interested in there longer term. From this, even the top that came in at near the end of October, commodities up close to 4%, S&P pretty much flat. So keep that in mind. Commodity sector longer term, very, very bullish on, and you see here in the bullish mode on weekly also. Finally, transportation, just because we don't look at it anywhere else. Weekly last major buy was the 20th of September. This is back down, shifting into bearish mode. Key major support now is 241. Nothing I am touching. This, by the way, is not a double top. It's not reversing a big enough move, but it's shifting into weekly bearish mode. Daily is in bearish mode. No great buy patterns on here. Something I will watch for a little bounce, but nothing I'm looking at longer term to get in. The last significant buy pattern was on the 20th, running up here, topping out near the prior highs, and then rolling over. If you want to look at it on the performance basis, since this most recent top, S&P down 7.5%, transportation down 8.5%, so underperforming, not something looking at. Since the top earlier at the beginning of November, S&P down 5.3%, transportation still down 8%. Don't want to be in this at all. And since the bottom of in the middle of September, you can see slightly outperforming, but nothing to write home about. So I just steer clear of a lot of this or unwind on. I'm watching for another bounce play in this, but then a significant long-term rollover. All right, that's what we have for you on the sectors. Let me know what you think in the comments below, whether this is helpful. Maybe at one point I will show you in a sector that's outperforming how we then do a stock scan. Let me know if you're interested in that. Thanks for watching, and I'll talk to everyone later. Bye for now.